Today, we will be taking a look at a breakout indicator. Who am I? I am DP Roberts, and for years I've been testing hundreds of strategies and indicators, and I'm testing more every single day. I've compiled all that information into spreadsheets and used it to create a profitable trading strategy with a custom indicator. And we have an amazing community over on Discord where we help you become a profitable trader. If you are interested in getting access to the spreadsheets of all the indicators and strategies that we have tested, as well as a free trial to our custom indicator, you can just sign up for our Patreon down below. Alright, as I said, today we will be taking a look at a breakout indicator. Before we do though, I wanted to put the testing scoreboard up for everyone to see. So to date, we have tested a total of 525 different strategies. The best one so far was able to achieve a 100% win rate. That was achieved using the Academy of Forex indicator to trade the crypto scalping strategy on a live trading account. Alright, as I said, today we will be looking at a breakout indicator. And so this is the third indicator in the NQ series that we've been doing here on the channel. The first indicator I was created was the NQ momentum candles. The second one was the NQ HF scalping, the high frequency scalping indicator. And the third one here is the NQ breakout box. Now, the momentum candles was meant to only give a few handfuls of signals each day, a kind of high quality setup, kind of one and done type deal. The high frequency, as the name implies, is a high frequency signal indicator. This one is meant to basically gain profitability by quantity. And so you just keep taking trades over and over and over, and you will eventually hit a nice winning streak that will get you in the green. But it is a wild animal at best and gives a lot of signals. Then there is the NQ breakout box. This one's kind of in the middle of the two. It gives a reasonable number of trades in one day time without being too insane and wild, and gives enough that you don't have to just sit on your hands and expect only one or two trades a day type setup. Now, of course, just like all the rest of the other indicators, the other two indicators, this one is also available for a 5-day free trial. You can also, if you haven't already requested a 5-day free trial on the other two, you can also get that as well. But if you are interested in a free trial on this one or any of the other two, then just go to our Discord, the free side that you don't have to pay anything. Go to the general channel and just at DP Roberts, that is me, and let me know that you are interested in either the breakout box, the HF scalper, or the momentum candles, or all three of them, or mix and match however you see fit. Okay, so let's dive into the indicator here so that way you can take a look for yourself to see if it's something you are interested in. So first of all, we have two moving averages right here, and they'll come into play here in just a moment. But the real benefit of this indicator is this box right here. As the name implies, this is the breakout box. And basically what it does is it's identifying kind of a small zone of indecision within the market, a very high opportunity, a small zone of indecision within the market. And often, not always, but often this box leads to a reversal point. And as you can see right here as a prime example, you can see how we are pushing up in a trend. You can clearly see that we are in an uptrend. We pick up the breakout box right here. And then as we pick up the breakout box, it basically has identified that price action in this particular instance is weakening, and that we should be more than likely looking for a push to the downside. It may not be a huge push, it may only be a small correction, just enough for you to jump in and grab some nice little profits out of it, or it might be a really big reversal. You never really know for sure. There's a couple different ways of how you can trade this particular type setup. You can either anticipate that it's going to break to the downside after you get used to seeing these boxes and then identifying kind of the context in which it is formed in that moment. Then you will get a little bit more comfortable with understanding which way you should be taking the trade. And in this particular case, these setups right here where they appear at the end of a trend push often again lead to a reversal. And so in this particular case, you can wait for the box to close and appear. You can then look for price to push up a little bit and then start to reject back to the downside. And again, this is all completely up to you how you do this. Not every single box will play out exactly the same, but you're looking for weakness within this particular price action movement after the box has formed. And once that weakness has appeared, you can take an early entry and then scalp this down for a nice little push to the downside. I recommend a 1-to-1 on these. It's kind of the ideal type setup. And so if you did, where's the position tool? There we go. Say you saw the weakness coming in on this candle here, you entered, say you put your stop close to the top of the box or even at the top of the box, and you targeted a 1-to-1. You can see here that price comes down, hit your take profit there. You can scalp smaller trades and offset a little bit to the negative side if you wish, because these are high probability setups and it is still profitable to do that. But if you want to capture and make sure your risk to reward is more balanced, you can aim for a 1-to-1. It doesn't have to be at the top of the box, but that is where I recommend, because that is where at that point the short trade on this breakout box no longer is valid. And then you can take your profit. Now let's look at a couple other setups here. As you can see here, we have another instance where we have a nice push to the downside. We get a breakout box, and you can see the weakness in the push to the downside as price starts to creep its way back up. And you can then enter in for a long. Now we get another box right here. They don't always appear this close to each other, but we just happen to get a nice little run of boxes really close. And this kind of identifies the second example here. The context is at the end of a nice move where you're already identifying weakness, these boxes often lead to a reversal. In a move where price is breaching and the two moving averages are starting to cross in a new formation of trend, these can be a nice continuation point or identification for you to feel comfortable in taking the trade to the continuation side of the box instead of the reversal side. And so you can see here that we get a reversal, we get our take profit, we get a continuation, we get our take profit, we get another reversal box right here because it's at the end of this move and price is pushed up hard and is showing weakness. And you can see this one, we get a really strong rip to the downside. Moving back over here, you can see that this one kind of straddles in between the two, but you can see that we get a push down. We show this weakness. The moving averages are starting to cross, the boxes appear, and this would be a nice continuation style move right here. This one right here, we have this really strong push up. We have weakness in the market now within this box, and we get this strong push to the downside. These tags right here identify when the break of the box actually takes place on the candle close. While this candle is forming, or any other candle that is breaking to the upside or the downside once the box is formed, will start to display these tags. And it's not until the candle closes that it then locks in that tag. You can take a safer approach and wait for the close in the tag, but they're not always going to be accurate. You need to learn to read the price action around these boxes to get a good, comfortable understanding of which direction you want to be entering into these trades. Sometimes they do work out well. We have a red here, sell, breakout to the downside. It's what we were looking for. Green tag here, breakout and continuation to the upside. Nice move there. Here we get these actually overlapped. This one right here, this tag actually came from this box here and this one here. And so, but these, you can see both of them were a reversal and a continuation, and we get a green tag moving up. This one's a short, so we get a red and a push down. So they can work well if you just take them and them alone, wait for the close, then do a 1-to-1 risk to reward, like so here, right at the top of the box, 1-to-1 risk to reward, you hit your take profit. Over here, we have a long trade on this one, close of the candle there, bottom of the box there, 1-to-1 take profit. We would have been right there. And moving over here to this one, long trade again, set up there, bottom of the box here. This one would have been a little bit of a stretch to get to that point. Most recent box is more ideal. We get a 1-to-1. Moving on over here, short side, we have closed there and tag. This one probably would have gotten you stopped out. It would have been really darn close. But you can see we get a 1-to-1 risk to reward. So you can see how these here, again, just play out over and over and over. This one you would have gotten stopped out on if you would have waited for the move. Now, this is a good example of how the move already took place once this candle closed. You don't want to take a trade where a candle is moved so far away from the box that it's no longer valid anymore. Here's a good example of a nice continuation or a trend continuation type setup. You can see price pushes down, the moving averages are crossing, and we get that red tag right there for a nice push to the downside. Again, short trade here, set your take profit there, or I'm sorry, your stop, and your 1-to-1 risk to reward right there. But again, not always will it work. Right here, this one would have failed. This one, you would have taken profit. And so it's all about, it's all about the numbers to get the numbers in your favor, basically by identifying high probability setups. And that's what this does very well. So again, I recommend if you use this, just set and watch these boxes and you'll just start to get a feel for when they appear and what is happening with price action. And you will start to get a very good read on where price is looking to be pushed in the next kind of leg of price action around these boxes. Again, if you're interested in the indicator, you can get a 5-day free trial. Just join our Discord. Hit me up on the general channel, again, at DP Roberts, and let me know that you're interested in trying it for 5 days. I'll give you access, and if you like it, just join our Patreon, and you will have access to it as long as you maintain a member, patron of the channel. All right, that's it for this indicator here. We'll go ahead and move on to the next video from here.